Good morning, guys. John here, Mr. Forex Fire. Get my handsome face of mine that little bit bigger. So yesterday, very profitable day. Let's just take a look at where we reside at this time. Where's our Excel sheet? And then we'll have a look at where the analysis went to and things like that and see if the bias was correct. Okay, so 33.3%, 1.85 profit per day. Okay, overall, let's just have a quick rundown. You can see each day growth. We've been in profit every day. Okay, every day, only one where we were in a minus, and we had 1, 2, 3 days where we didn't take a trade. For over a 4-week period, that's absolutely fantastic. Again, it doesn't mean it's going to be replicated month to month, but it is showing that the procedure, the mindset, and the focus that I put towards the charts and what I do on a day-to-day basis works, because it's a phenomenal consecutive run. And it's not a case of I've done that spreadsheet and I've just gone, look at what I've done. I could have quite easily done that, but I stepped up to the challenge, and everything that you see on this spreadsheet, I've done in front of your eyes on the recordings. Okay, that's the difference between me and somebody else just showing you a spreadsheet of results, or a screenshot of 10 pips, or a screenshot of done my daily target for the day. I'm showing you on a day-to-day basis. I've done it for a full calendar month, and I've attained that 33.3%. Now, today is going to be rather interesting, because one, it's NFP week. Let's just update this, 2.9%. It's NFP week. And 2, will there be a lot of market movements today ready for tomorrow? We will find out. So again, done it right in front of your very face, guys. And I'm glad I've been enjoying the process on this, to be fair. Let's just minimize that. Maximize that. Now, yesterday, the bias on here, I did a couple of lines. I mentioned about demand on here, supply on the top on order blocks. We thought we could have possibly have gone out of here and then up to the either orange on the top, then a massive drive down, then a push up. Or when we focused into the area that we were in, I said I was focusing on this area here. And look, again, looking at what's to the left structure-wise on maybe the 15 or the 1 hour higher time frame, looking for that order block and determining where your supply and your demand areas are, you can predetermine the movement in the chart. Okay, so I just want to get rid of that, because that just couldn't, it helped us a little bit yesterday. So I'm just going to minimize my big Geordie head, and then what we'll do is we're going to structure again, player by player, structure. We're going to first of all put our goalposts in. Okay, first rule of the day, goalposts, 8:30. Draw this out, 8:30 AM start. And I hope you're getting so much out of this. If you want to leave a comment below, let me know. Let me know how it's going on for you guys. Let me know your percentages that you've been getting. It'll be good for anybody that's watching this. Put in your comments below. Have you been putting this in practice, and what percentages have you been getting since trying this? Also, don't forget to hit the subscribe and the notification button. Okay, so we're looking at structure points at the moment. So first of all, this high point we're going to leave on. I'm going to get rid of this because we mitigated that pretty well the other day. That was fantastic to see that coming into play. Again, I'm going to keep this bias on here. In fact, no, we'll take that off. so it'll just get in the way. From there, I'm going to hold with this area, but I'm going to have that there. We'll have that yellow. That's on the 15-minute. We always do the 15-minute first of all areas where we could have importance and things like that. Again, structure-wise, I'm going to have that there. Yeah, we'll have that. We'll have that grey. Change the grey. Right, so the bias for today, we're going to be hitting up into here and then down maybe to here. Let's have a look. One of a couple of things, because we broke structure here. We might hit up into here, come back down to hit into this block, okay, and then to shift up to the higher side. These orange areas will keep on at the moment. The lower side, I'm not going to draw any orange lines down at the moment because we've got this big arse order block from back in the day. Again, I don't know whether it will. We might get liquidity take on this higher side to possibly push down for tomorrow to hit these areas to then take off on the manipulation of the NFP. We'll have to wait and see. But again, we've got some massive downside in the past history. So I'm not too concerned about bias at the moment and where I think I'm heading, because we're heading into the last 2 days. I'll be more interested in just our crossbar area and our goal line area between the goal posts. Okay, so let's go down to the 1 minute, see where we are structure wise. Let's have a look. Let's get into this. Little bit of concern at the moment, simply because we've had our push. Okay, we'll get the fire wand. We've had our push this morning by the look of it, and we're now entering more certainly here the distribution phase, because we've had the drive push. So what we're needing to do, we're really needing to wait for either that or we're waiting for the drive down into that. So we're waiting for one or two things. What I'm going to have to do, guys, is pause the video. We'll come back in the next, what, say 10, 15 minutes. We'll see where we've driven out of that area, because again, consolidated distribution phase in here at the moment. General bias, we are looking maybe a move to the top side, in all honesty. Whoops, get that back. A move to the top side, in all honesty, to then take out these higher parts, to then possibly crash down into here. Again, if we come down to the lower side, which it looks like it's doing at the moment, we might get a break, a retest, and then come down into the lower blocks of this. Okay, so again, we're going to give it a minute or two, see where we get that initial drive out, and then we will take it from there. I'm just going to see if I can lock in that. Yeah, so I'm not going to move price about. The bias is about. I would really want to see that if that price was coming down. Dear me, it's going to be one of them days. I would really want to see that structure to be broke, to be fair. See, we've got here liquidity here. In fact, to break a structure there, we've got the order block there. We'll just make this a little bit darker. The only problem is you've got liquidity residing just above this. So it's going to make it quite difficult to trade from that area. You see where I'm coming from? So where we've got a distribution, we're having to push out at the moment. We've got to break a structure here. So we would generally wait and reside for up to this point here, okay, to get the push back down to here. But there's liquidity residing on this top end. Let's just take a look. Short. Go to here. Go to here. Go to here. Tell you what, we'll risk it. We'll risk it. Risk it for a biscuit. We'll go for, again, 2% risk. We've got 33%. 2%. It's just the only thing that we're worrying about at the moment, like I say, is liquidity residing on this top area. We might get the push down to push up to then come back down into this order block to initially drive us up, but we'll see what happens. We've got at the moment a 1.77. So what you're looking at that, let's just get this out. It's going to be around about 3.54 growth. So we'll go with that, guys. 2% risk, 1.77. Again, over time, we'll knock these things away just to get rid of the noise. I'll be back with you in around about 5 or 10 minutes. 2% risk on a 1.77 to a potential gain of 3.54. Be back in a moment. So here we go, guys. I was just about to go make a morning cup of tea, but it looks like we're going to start to get entry. Again, I like to structurally show you play by player. See if we can get that entry. We are risking 2%, 33.3 at the moment. I am a little concerned, like I say, on the higher side. We've got liquidity holding here. We've got the bounce off. Hopefully, we'll get the move down to give us the result. But as we move up, move down, I will show you structure player, the highs, the lower highs, the lower lows. And if we break the form on that, I'll show you the reversal and the structure points of that. This will possibly go to take the higher side liquidity, a bit of a risk trade, if I'm honest. But again, the structure is there. The structure's there for it to go to where we would expect. If it does, it just means it's held its structure for it to move back down. If it doesn't, hey ho, it's only 2% take off there. I can afford to take those risks today. We'll see what happens with that. What I'm going to do, I'm just going to move some of this noise out as well, just so we can start doing the playbook on this. Again, it looks as if it's going to go to the higher side and take us out. The general bias feeling that I thought was going to happen when you see this first play out, but hey ho, it is what it is. I'm willing to risk that. Just to give you an idea from what this is at the moment, we've had our initial drive up this morning. It's happened around about 7 a.m. to be fair. That was the impulse move. We then went into a distribution area, okay, and it's a consolidated phase. We've then had a bit of a break, a structure here, creating a lower low from the high area here. Again, this is starting to do its pull back up to the liquidity area of here. But again, there's too much liquidity residing on this top end. I think we may have just risked a little bit too much there. But again, I'm doing this in front of your eyes. I've got nothing to hide. Let's see if it will hold. And then push us down to where we need to be. So I'm going to pause the video. You've seen it that we've entered. You've seen that it's in drawdown at the moment. I'll come back in the next couple of minutes. We'll see where this trade takes us, and we'll speak to you in a bit. So as you can see, we've come out of the drawdown a little bit. Structure-wise, we've now got a lower high area. So as I'm doing this player by player, you can see we've got the high, the lower low, the lower high. Hopefully this is going to continue down to possibly break out of this, to even come to take a liquidity here. Again, there's still every chance that this may just be a little part of a reversal to go to the higher side, to be fair, but we shall soon see. So structure wise, we have got our distribution area. We still have liquidity a little bit higher on this side, so that is a little bit of a concern. High, lower low, lower high. Let's see if we can hopefully get the drive down from the swing point here. If we do, we can then possibly look at attaining a structure point from this area here, which will go in a little bit more depth and analysis once we get the play. Hopefully we are catching this at the right time on the first play. If we do, there's every chance we might get 2 or 3 of these played out today, to be fair. We missed out on a couple yesterday, but towards the end of the session yesterday, we actually got the final swing come in and touch the area of importance. Again, we let price come to us. We don't go chasing the price area. Okay, so again, I'm going to pause the video. We've now got a new structure point of a lower high from that high. And let's just see if we do get the player coming down to the bottom side. Once again, just to give you an update on that, that's going to give us a risk to reward of 1 to 1.77, I do believe it was. And if it comes out with a 2% risk, it's a 3.54 growth. Okay, so that's just the update on that. We're getting the push and the drive down at the moment. I'm going to go off and make a cup of tea now, and then I'll be back in a minute with my tea and the morning biscuit. So we'll be back in a moment, guys. All right, guys, so we're back. 9:10. Got my mug of tea. I love a cup of tea on the morning, to be fair. Me little biscuit. So, play by play. High, low, high. Lower low, sorry, lower high. We've come in and we've hit a structure point. It's retracing from the structure point. So that block there at the moment, that there is held. It looks as if it might come out, break, retest, and then it might sort of shift and take us out, if I'm honest with you. Again, I'm trying to go deep down analysis to try and show you the thought process behind of price movement and price action. So if this is going to sort of take us out, let's go deeper. If this is going to take us out, it's most certainly because it's tested this area, okay? And then it's sort of, as it's tested into this block, it's come out, it's then come in to bounce back in. Normally, like I say, we'll just get this in a bit deeper. Normally it would be like a 50% area. So again, just on the eye, that would be a 50% of that. If it was going to sort of behave like that, where it's come to test, bounce out, retest, and then knock us out of the liquidity on the high side, that might be why it's done that, if that makes sense. So that's a behavioral pattern that I'm expecting to happen now, simply because we need a full breakthrough and a retest. We had a false breakout here, if that makes sense. And as it's done a false breakout here, it's done an engulfing candle. And the price has been shadowed on this. So this might be its move, where it's going to move out of this area and take out this lower high. In all honesty, I'll be very surprised if this whole thing will hold its structure to come down to the lower end. After seeing the candle formation on here, I do believe we're now going to go out and take us out. I should really stop the trade on the break even, but again, I'm gonna hold it. I'm gonna hold it and see if it will come in for us. So we're just gonna wait, but I do think it is gonna go up and take us out. So this is an education side of things. Let's just see if it does push that up, might engulf up and over. Let's check this time there, but I'll give you a quick brief explanation on why this is holding and what this fake out is. Let's come back into retest. Again, my bias at the moment is I do think this is going to come and pull out and take out these to take out this. I'm going to pause the video. We'll come back in a moment just to see if it is going to do that. And if it does, then you've had the pre-analysis before it's actually done it. So we'll be back in a second. Back in there, guys. Something I've just realized when looking at it full on. Okay, we're coming down. Come to here. Come to the lower point. Bit of a harmonic pattern. Okay. So from there again, order block wise, if you look at 50% of the central side, look at that. It's testing on that as well, and it's pushing up. So what I would possibly be aiming for, in all honesty, is if it held structure and price come to there. Now, there'll be a reason why I would be looking at that. If it did do that, it's simply for this sort of process here. Okay. It would be that there. Okay. Now, if I was to make that green, you've got a head and shoulder pattern. So if this holds structure, and let's say price drives down to here, that's a 1.13. So that might be an area that I may be interested in if it was to hold that sort of structure. Let's go back one to get rid of the head and shoulder. And like I say, I'm trying to delve a little bit deeper the best I can. But overall, structure-wise, I don't know how much longer that this can hold its shape. We do have the harmonic pattern. Normally on the in the B area, okay, the A, B, because that's what this is, the A, B before the C drive. So this here, this holds its own significance on the central part, which is this here. It's come down, it's sort of wavered in, it's come out, it's bounced off that, and it's on its way up. So again, we'll just get rid of that. If I get rid of that part, and I just want to do that at the center of that swing there. It's coming down, it's testing that center part there. We are getting the initial drive down, but the center part there, from the low to the high, it's testing that area now. It's wicked onto it. So it's a very, very determinant structure point, that, to be honest. And if I was to change that, let's see, into our fire zones, we can see we're on the center part most certainly. These areas here, just if you go to the left of here, you will see that these hold so much validity and strength on why price returns to these areas. You can see here how it's bouncing between those at the moment. Price doesn't know what it wants to do, but the longer this goes on within this range, this total range, okay, price will then possibly want to come back and take out liquidity from this higher side, because when we look on the lower side, there's nothing really underneath price action wise that is going to hurt the retail traders much, because you've got so many sell stops buy sell limits and buy stops which are up here, which can be taken out by the bankers, to be fair, on smart money. So I'm just going to get rid of this, and I hope these little bits of things are giving you some light bulb moments. Just going to get rid of that because we've crashed through that at the moment. Get that back. Again, one big area of importance for me is that there, simply because of that head and shoulder pattern. If we come down to here, I might close the trade out, to be fair, on a 2% risk. It just means we've got a little bit of cushion to play with for the day. We'll see what happens with the price. I'll pause the video from there. Just to give you a little rundown on the structure. We've had the initial drive, the push into a distribution. That distribution, we had a break of structure here. So we created a high, a lower low, a lower high. We're now in a bit of a flag pattern coming down to this point here. This here is the left shoulder. That would be a right shoulder touch. This is the head. This is a harmonic pattern. We're at the structure point of the middle part of the harmonic as well. There's so many confluence areas where we could get that, obviously, that retracement from these areas to come up here, to take out this low high, to then take out this high, to then take out the initial higher side of price. There's a lot more that can be taken out liquidity wise on the higher side than what there is on this side here. So hopefully this is sort of starting to sink in on the day-to-day analysis that I'm giving you. Pause the video and then we'll come back and then we'll take it from there. Hi guys, what we've got there, we are now starting to get the move down. I'm gonna that's a 1 to 1.13. We go back. Let's see if we'll get this push down. 177 was the target. I'm going to call it there, guys. I'm going to call it from that point there, to be fair. That's where we are. 1.23. I do believe this is going to push back up because we're on the right shoulder. So 1.23 on the risk. Let's have a look. 1.23 times by your 2. It's 2.46 gain. 2.46% gain. And I'll show you why we called it there. It's just simply too many confluence areas. I mean, we said this was a harmonic. This was a left shoulder. This is a head. We said about the sort of right shoulder. Okay. Let's have a look. So we mentioned left shoulder, head, coming down to the right shoulder, okay? But watch this area here, this swing point from there, okay? Because that's where I said that where liquidity was as well. When you go from this area up to this area, look where the right shoulder is going to reside. It's slap bang on there. So for me, that's why I called it on there. We're starting to get that retrace. We've got a 2.46 trade. Let's just have a look. 2.46. At the moment, 2.46%. 33.3 plus 2.46. It's 35.76. Divide that by 1, 2, 18 days. Let's just get this correct on. 35.76 divided by 18 days. Is that correct? 5, 10, 15, 19. It's 19 days, sorry. $35.76 divided by our 19th day. At the moment, it's 1.88% on a day-to-day basis. So we're going to go back to the chart. There we are. I'm going to pause the video. I'm going to wait for a new swing point. This may very well come down here, but for me, all the indications were there that the head and shoulder pattern, it's going to bounce off here to go out of here. Now, there is a technique we can use on head and shoulders. I don't want to go too much into detail, simply because I want to keep this as a structured play-by-play and stick with the smart money scalper method without going into delving too much where head and shoulders and things are. So I'm going to pause the video, guys. We've got a nice win there on a 2.46. We'll be back in the next 5 or 10 minutes once structure has played out a bit more. All right, guys, so it looks as if price is finally going to actually come down to where that lower low was, to be honest. Not bothered, simply because we're getting 2.46 growth. Again, going on the strength and the currency strength, I should say. I've just seen an update for Andy, who's one of the main mods in our group. He's just posted it up there. The euro is on 5.0 on the strength. The USD is 4.0. So we may start seeing some bunching up and consolidation. So will we actually get the push down to the liquidity being taken? I'm not too sure. We are going to be more certainly staying within a consolidated range for this session by the looks of it. So to even get this out of the market has been a good trade so far today. Just to give you an aspect on the price range, that price from there down to that low has only been around about 9 pips. Where we are from when we started the session, that's from there to where it's went to move to, there's only been about 7 and a bit pips of movement. So we are very, very much so in that tight consolidated phase. So even within that pip range, okay, even within that pip range, to get a 2.46 growth out of the market, it stands this strategy and this method to testament, to be fair. Even though that pip, like I say, 7.5 to 8 pips is what it is. I mean, the stop loss that we are near was about 3 pips. I close it out on just under 4 pips. So again, overall, if this was to come to the area of 177, which is that there was just over 5.5 pips of movement. It looks as if it might stretch to that. We close it out early on the preference of the halfway point of the harmonic, the head and shoulder pattern. This has just surpassed, obviously, the purple line just above here, which this was holding structure for that head and shoulder pattern. Close it out. I was happy with what I've taken. We'll just take that back to where it was, where we closed the year 1.23. And it looks as if the euro is going to start pushing itself up a little bit. It's going to go into, like I say, bits of these. Let's go a little bit sort of deeper, see if I can see something in here. Just to give you a little bit of fun analysis, because I don't think there's going to be much more coming out of this within our session today. So as we go down, okay, as we drive down, we are looking for any sort of footprints and things like that. Okay, so again, imbalance areas. Imbalance areas is where we've had a drive of price and there's nothing within a wick has come back to mitigate those areas. And as you go down each candle, we can see from that wick to that wick, okay, that's an imbalance area. And again, highlight these, pause this video, timestamp it. That's an imbalance area where we could come back to mitigate. We've come down this here, but the price came back up to mitigate into it. Again, see where this wick is here. This was all imbalanced until this wick came up to mitigate the price into that. There's been some the price has been pretty fluent and efficient when it comes back to to mitigate areas of inefficiency. Again, when you look at this, full mitigation. Again, just to show you a deep dive, okay? Let's have a look into this. So if you were to ignore that area there, okay? So if you were to ignore that area there, and there's the confirmation of that trade playing out, to be fair, the 1.77, right? So if you were to ignore that, okay, your imbalance would have been this here. That's your imbalance, okay? Let's just get rid of that because that just created noise now. So that there was in balance because the price is driving down, okay? It's come down, but then it's come back in to mitigate beautifully. You see that there? If we draw that line across, you see how it's come up to respect that and mitigate into that, and then it's done the push down. You see where I'm coming at with this? What we've had is a drive down. We've left a footprint of imbalance, okay? As we've come down, we've come in to mitigate certain contracts within that imbalance. We've driven back out again, but then we've gone bang. Let's take all of that imbalance footprint away, and then let's do the initial drive. Let's do the push out. And it not only has it done the push out, it's actually taken the liquidity. As I'll show you, you'll see it's actually taken the liquidity over here. Okay, so now I can start looking at another trade. Let's just have a little look. We've had the drive out. Let's get rid of this. We'll have a look at that. Just want to create that there. So we've had a break of structure. Again, we always try and be visual. It helps you to distinguish these areas. So you've got a lower low, lower high. You've certainly got now your lower lower. We're now just waiting for a pullback to then start the next drive, if that makes sense. Okay. At the moment, we are waiting 50 seconds. We're waiting for a candle. It looks like we're getting a big push down. Again, the bias for this was we were heading towards this sort of area. It looks as if we're still heading towards that. And I just want to explain, guys, for the last 4 weeks, of me documenting this journey, all we have seen is Euro USD being in that big downtrend. At times we've had a little bit of a pullback, but in an overall position, it's just been on the down spike. So here we've got 15 seconds, 13 seconds. And what I'm going to do, guys, on this one, I'm only going to risk the 1%. Okay, I'm only going to risk the 1% on this one to protect the 2.46. So let's just keep it as we mean to go on. 2.46. We've got risk 1%. We are not taking away too much of the profits away if it's to come back and take out our higher sides. So we've got on the longer term path. Okay, a longer term path. Yeah, purple. That is long term. Okay, high, lower, 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 high, lower, lower. We've got intermediary price, and again, just to show you the structure and just how good this stuff is, to be fair. If we go up on a higher time frame, look at that, guys. Like I say, can't make this stuff up. Look how that plays to the button. Okay, high, lower, 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 high, lower, lower, and it's the drive, the drive, the drive. You see that? Back down to 1 minute. So you've got a higher time frame concept overlaid and overshadowed onto an intermediary price. Comes with practice. You just need to practice drawing these up yourselves. From there, you can look at 50% areas. So that swing point there. Okay, let's just get the cog. Let's just do the IP here. 50% may take you up into here, which could take us out, to be fair. I'm just going to mark this for fun, for shits and giggles, just to see if this does hold any validity. We'll get rid of that. And we'll just see if this doesn't hold and it takes us out. Let's just see what relevance that will hold with regards to the pullback of the ABC maneuver, if that makes sense. I'm going to pause the video. We've got some analysis set up. We're having a bit of fun. We're drawing up the charts. Hopefully you are seeing some more deep down analysis on what I'm looking at. Again, bigger picture, I'm not too concerned about. We've done our bias for today. We've had our supply and the demand area. We have focused the attention into a 2-hour range. So on a bigger picture scope, price is not going to violently move 100, 200 pips at all within that 2-hour range. If it does, it's a massive spike in news. Generally would normally come on an NFP day, to be fair. But we're going to see if taming the structure, taming the 1 minute movement to where we have our set parameters and let price come to our areas. We're not focusing too much and sort of setting alarms, alerts and things like that and overcomplicating the process. We are simply looking at where we are just before the start of the session, work out our structure from highs to low points or lows to high points, look at the order block areas. Bearing in mind, you've got your half 8, your half 10, that's your goalposts. You then want to do your supply on the top area, which is order blocks just above where price action is. That's your crossbar. And then you want to do your demand areas below, which is future reference below price. So then that's your goal line. And you're the goalkeeper. You're watching between post to post, crossbar to goal line, and you're watching your price movement between that, forgetting about what's all around you, around the field of play, and just focusing your attention into this is where I'm at. This is my goalkeeper. This is where I'm going to be setting price. This is where I'm going to dive to take profit, and we're going to take what we can out of the markets within that contained area of the goalpost structure. Okay, I hope that makes sense. Let's see, we're getting entry on this. Again, it's a 1% risk. I want to see if it does break us out and it comes to here, it's obviously because there's 50% of this, which is, again, we talk about things like, let's have a look. Like your B, and then that's your C pattern. I just want to check something as well. So from that to that, the pullback. Look at this, guys, the pullback. And we speak about equal areas. We speak about equal areas in how price respects patterns. That the 0 to here is the drive. It's the drive down. There's the entry, the drive down. B is the pullback. So I've just taken that to that. Okay, target area was down here. It's come to meet that, which is absolutely fantastic. This could have then have been around about a 2.23 in fairness, but in hindsight, we're just looking at what patterns are doing. Again, what we're looking at the moment is this holding structure. It's wicked into it. See if we can get that initial drive down. 1% risk. If it stops us out, the possibility is it's then going to come to this area, which is the half of the movement of the A to B, which is the consolidated zone area. Again, what you've got is that there to that there. That's your halfway point. See that? That's your halfway point. Let's see if we hold structure with regards to this swing point. Okay, hopefully keeping us in play for a lower high, area with a question mark at the moment. So that could be a lower high area with a question mark if it holds structure. And then we'll take it from there, guys. A 1% risk to gain just under 3. We'll be happy if that sort of plays out. Let's see if it does. We'll be back in a moment. All right, guys, back once again. We're getting that initial drive down. 1% risk. It's coming down nicely. Let's just see, is it going to play out for us? We'll take a look. To say what we'll do. Let's have a look. Say what we'll do. We'll if I can get that to a 2%, close it there. We'll close it there, guys. Okay, on that price there, 2.31. 2.31. Again, closed. Get that there. I'm going to update this. .31%, because we only risked 1% on that trade. Okay, so it was a 1 to 2.31, so it's a 2.31 risk reward, I should say. It could have been just under a 5%. For today, though, we are now on. Let's just take a look. 2.46 plus 2.31, a 4.77% day overall. 2.31, so 35.76 plus a 2.31, we'll look at a 38.07, 38.07%. Divide that by the 19 days. We are just over now 2% a day. 2% a day, which is fantastic. Let's go back onto the main screen. That's certainly tanked out where we need it to be. We've got to break the structure now. So let's take a look. Break the structure. Template. Okay. So now we've got that break of structure. Get rid of that. Get rid of that. Now this is where it's going to get a little bit more difficult, because obviously we've got a huge order block on this upside. I'm going for a short. That's your order block there. That's your pullback. See, that's not too bad. So we've got a 1 to 2.04 risk now. Again, same again. I'm going to risk 1%. Okay. We're going to risk 1% on that trade. See if we can come in and get an entry. I don't want to risk too much. We've got at the moment a nice 5% for the day. Let's just see if we can get. Let's just see if we can get that push up to get an entry to come in for our final trade, possible final trade for the day. It's going well. It's going well today, to be fair, guys. It's going well today. Right, so 1% risk. That was a 2.31, yeah. 2.31. 2.31. 31%. Fantastic stuff. Like I say, can't make this stuff up. That's your lower low, lower high. Again, structure. Let's mark out structure. Helps you visually. Helps you visually. And again, I'm not using any indicators. I've got to stress this. There's no need for indicators. Indicators can be helpful, but I would not solely trade from an indicator aspect. It just wouldn't do it. Wouldn't do it. Overall, you won't get the consistency. You won't get the consistency as what you would do if you worked upon upon a price action movement. So that's just my thoughts. We'll have a conclusion towards the end of the trading session. I'm going to pause the video. We'll see this whole structure, and then we'll take it from there, guys. So at the moment, we've got a 2.46 plus a 2.31. We're on around about 4.77 for this morning session, which is fantastic. It's absolutely fantastic. Pause the video. We'll be back in a bit. Hi guys, so what we've got now is we've got two trades that has won us today. We starting to come into a third trade. In fairness, on the 1 minute scalp, it's not often we get 2 or 3 trades, in all honesty, but we'll take them. And again, regarding what we've taken reward wise on this as the strategy and as the plan, this has been a phenomenal day, considering we are basically in that distribution phase. It looks as if that second trade coming into the third, we've come out with distribution and now going to start plowing into a downtrend, to be fair, based upon what I'm seeing, in all honesty, which again is sort of portraying to the bias of what we initially thought. We possibly thinking towards this before the end of the week. I think tomorrow is going to be a massive player with regards to price and price movements. I think going into tomorrow, what I may do is take the risk factor, even though we're on a good, heavily 38%, I think it is. I'm going to take the risk factor from the 2% and put it back down to the 1% going into tomorrow, just for the NFP day. Because again, if we get into 2 or 3 trades in consecutive because of the rapid price movement, what I'm expecting, 2, 3 or 4 trades on 2%, you're looking 6, 7, 8. I mean, we'll still be heavily in profit, but from my sort of aspect and looking at it, yeah, losing 6% can be hard. But if let's say 3 of those or 2 of those had won, it was giving you a 1 to 3, 2%, you're going to be getting over 12. So we might have to look at that, to be fair, looking at it from a mindset side of view. From there, this is the final trade of the day. We've basically only got a few minutes left. I mean, this is what we've got 5 minutes going into the trade. See if this activates or it pushes up into price. Again, we're only risking 1% on this one. What I would possibly do is have this down to here, to be fair. Move that low there. We're waiting for a lower high. Again, structure-wise, we always visually write down our areas. Again, it just helps you understand the structure. It helps you sort of maintain your eye within your goalposts, if that makes sense. From there, that's a 2.64. We'll drop that to that there. So it's just before the body, to be fair. Again, I mean, overall, we're as a conclusion, okay, I mean, I'm just going to stop the share a minute. We'll have a little bit of a conclusion. We'll come back and see if this has actually come in and sort of won us anything. Let's have a look. We'll just get rid of that. We'll make that bigger. Right. So we're coming to the end of the month, the 4 weeks. the 4-week period when I first started this. Again, I wanted to do this for one of a couple of reasons. Okay. There's so many things out there at the moment where with these indicators and things like that, and telling you you get in now, you get in now. You just, for me, my personal journey, and I can say this because I've been there and I've done that. Okay, relying on indicators is too emotional. There is nothing that is going to be consistent. Okay, indicators is just a lagging sort of preempt of what's happened up to whatever you set that lagging indicator to. Several candles beforehand, it gives you an average movement. Then it will tell you whatever that indicator is going to tell you, whether it's to get in on here or there's been a crossover of price and things like that. Like there's a one called the Forex, where it's a cross of sort of currency strength and things. For me personally, it's always been about structure. Now, structure points and what they are, what they attain, and what the validity is. I used to use these areas on higher time frames, and I used to follow a few people there for a while, where they worked upon supply and demands and sort of structure points, order blocks, and things like that. Now, me being a Geordie that I am, magpie, I like to take bits and pieces, okay? Take bits and pieces of aspects of trading and take them away. And there's one thing I've done over the 4 years of my journey. I've been up, I've been down, I've been here, I've been there, I've been there. It's been very emotional. But one thing I've done is I've stayed the course. When it's got too much, just take a little break, come away from the charts, take a rest, because you can make yourself blindsided and sick. Take a little rest. Markets are always going to be there. Come back. But there's one key thing that I've done in my journey in learning Forex. I've always documented things, whether it was for myself or whether it was to keep myself accountable, and showing my journey on things like YouTube, Facebook, and things like that. Because there's one thing I like to think that I can do is I hold a lot of honesty. I hold a lot of integrity. And now, because of the level I'm at, I'm given a lot of value, which is the 3 core things I pride myself on. So from there, going back onto the indicator things, in my journey in the first year or two, I always relied on indicators. When this was this, do this. When this is that, do that. The RSIs is oversold, underbought, things like that. Even being involved with communities with indicators saying the signal says sell, the signal says buy, take it, take it, take it. Once I sort of cut that sort of stuff out and thought there's more to trading than what that aspect is, I wanted to learn structure, learn why price was going back to certain areas. I started reading books and patterns and trading. There was a good one I got. I'll have to hunt it out and show you, I think. It was all to do with patterns and structure and things like that. Read this book and it sort of gave me a trigger moment, a light bulb. And then I watched somebody a while ago, and they went on the aspect of they showed you a chart, okay, and they hid what the time frame was, and they were working out structure points, and it was a lower time frame structure. And this guy's like sort of showing you, and he's showing you these areas, how to respect it and things like that. And then he took away what he was hiding, and then he showed it was on the minute chart. And it sort of, that's when I had my light bulb moment, because then I was already looking at patterns, areas of respect, and how we'd done that. And I thought, is this on an hour? Because I always worked on a 1 hour and 4 hour. So once I'd seen that, my aspect on trading shifted. My mindset on trading shifted. That's when I thought, at the time I was learning sort of smart money and structure, liquidity, sort of, what's the word, imbalance and things like that. And these are key areas within price in itself. And again, price is price. You've heard me say this before. Price is price. Doesn't matter what time frame you're on. The 1, 5, 15, half hour, 45, 1 hour, 4 hour, daily, monthly, weekly, yearly. Price, when you look on a chart, price is going to be that on every time frame. All it means structure-wise, bigger picture, okay, structure-wise, when it gets to that area, because it's got structure within the pattern itself on, let's say, an hour, the candle, okay, you've got more volume. Now, that's the word to use. There's more volume within that structure that can hold as what the 15, the 5, and the 1 minute holds, okay? So it's volume within structure that holds. When you go down lower on your time frames, you're refining your entries, okay? Now, when I first got involved with lower time frames, they can be emotional. It brings a different sort of mindset, a different skill set in your approach and mentality to the trading, okay? Now, this is when I thought, yeah, I can see that side of it, but when you are not understanding structure as the bigger picture and the volume of what that structure holds, then you cannot sort of get into scalping unless you can understand what's happening on the bigger picture. That's when I sort of stepped back and had my light bulb moment, being the magpie, taking bits and pieces from all over the place, and realized, well, I'm now a full-time trader. The best time of day that I can trade, and I don't want to be at the charts all day, I want to do when the kids go to school from the London Open session. So I said to myself, 8:30, 10:30. So instantly, this big chart of all this, this big chart, I dissected into, that's my goalposts. Had it down to 1 minute, so I didn't care what was happening on price right the way up here. All I cared about from that goal-posted segment was what happened 2 or 3 swing points previous to me starting that session. And there's a reason why I say 2 or 3 swing points, is because I'm condensing the time allowance of price to move, okay? I'm only allowing price to move in a certain segment of time for me. So in essence, I'm trying to sort of cage the price to a range and area of where I can trade. And if I'm looking at 2 or 3 previous high swing points, 2 or 3 previous low swing points, set my crossbar to the goal post with the supply areas, and set my goal line to the goal posts on the demand areas, I've now got a more contained price range, structured approach, work my bias upon that, and having these lower time frame 1 minute order blocks as our starting blocks, or the price range to respect on the swing points, then I'm able to let price come to me. I'm not going out chasing price, trying to use an indicator to tell me that, yeah, now it's time to get in, without seeing why that indicator is structurally telling you to get in on the action, if that makes sense. Now, I hope it's setting off a few sort of sparks within the brain there, and it's giving you that light bulb moment sort of thing, simply because what I've done is I've been able to contain the price to a structured field of play that I wanted to work in. And I just look at my previous swing point areas, maybe 2, no more than 3, set my supply and demand areas within those goalposts, work out a general bias of, if it breaks to these areas, if it breaks, it goes to these areas. But overall, that's the time that I've got. Right, so I hope that makes sense. And again, I've loved doing what I've been doing for these 4 weeks. I've got so much more planned. After tomorrow, I'm going to start drawing a few things up because there's so much I want to do with regards to sort of going into risk to rewards and being able to use this and being able to scale up what you get out of it tenfold. Okay, so there's a few things I'm trying to put onto sort of spreadsheets and other things. You've seen over these 4 weeks, there's 38% being growth. I've only had one sort of losing day, around about 3 break-evens. The rest have been profitable. Now, what I've got planned, what I have structured, and what I want to implement, okay, plan, structure, implement. This is my next part of my journey. So you've seen the growth is bang. It's like that at the minute. 0 to 38% in 4 weeks. I want to go bang to scale that to not just be 38%. I want that to scale to go to 100, 200, 300% growths. I've got something planned. I'm going to structure it. And then in the next week or two, I'm going to implement it. And then I might very well sort of document that process as well for anybody that wants to come inside of here. And like I say, I'll always show everything up front. Honestly, if it doesn't work, I'll show you why it hasn't worked. I'll explain why it hasn't worked. If we go through the process, it's working. It's fantastic because we are shifting from this gear of being 38% and doing that. Now I've got a plan, a structure, and then I'm going to implement it. If it goes to where I expect it's going to be, I could possibly triple that and then go from 30% to possibly 100% or even 200% growth within a month's time frame. And I'm going to show that exclusively with what we have here. Okay, that sort of stuff will not be coming on my wall on a day-to-day basis on how I've done it and what it contains. If you want to get access to what that is, you have to come and support the channel, because what I've got planned and what I've got structured and what I'm going to implement is going to be such a game changer, not just for me, but it will be for many others around me. Again, my name's been John Docherty, Mr. Forex Fire. Let's go back on the chart and see where we are. And please drop your comments below. Let me know if you're getting so much out of this. Okay, so we're looking at, it's hitting entry, but again, it's hitting entry. I've closed out my trading for the day. I'll keep this going for where it is at the moment. Okay, my trade's officially finished for this morning. We'll see where this is from tomorrow. Again, it'll be what, a 2.25 if it comes out, because we're risking 1%. But my trade's done for today. Let's go on to the sheet. We've got a growth. Let's just get this updated. Like I said, everything in front of your eyes. All right, let's have a look. So we've got $2.46 plus a 2.31. It's a 4.77 game. Okay. And I think I already updated this anyway. So it's a 38.07. It's a 2% gain. So again, guys, we'll just stop the share. Make my hands and head a bit bigger. I hope you're getting so much out of this. I've got so much more planned. I've got even more going to be going into this community. If you want to come in and show your support anywhere underneath the video that's on YouTube at the moment, if you click on YouTube itself as well, you'll see a support area where it says join for the price of a cup of coffee. Come and support the channel, because we're scaling up. We're going to scale this up with what you've seen on here. 1 day left. 1 day left of this this journey of showing you what I do on my day-to-day journey and what has sort of set me free to be able to trade from home. And then even if you take a little something out of this, and tweak it to something that works for you, because what works for one person doesn't work for everybody. But this works for me, and I've showcased that. So again, that's enough for me rattling on for today. Please don't forget to hit the subscribe, become a free subscriber to the channel. Okay, from there, hit the notification bell. And if you don't mind, please put a comment or two below. Let me know how much you're getting out of these. Are you getting these little light bulb moments? And I'll end this by saying this. I hope you are taking notes. And on each day of taking notes, you are setting the date as your title for the notes for the session. From there, if you have understood something or it's given you a trigger point to think that's giving you value, write down what it is, pause this video, highlight that with a timestamp. So when you want to go back and look at something, you've got an archived footage to be able to go back and say, all right, I'm looking at imbalance. I understood that section and that part of it. Let's go back and have a look at that. I'm looking at order blocks, swing points, IPs, 50%, harmonics, whatever is sort of giving you that moment, highlight it, document it, archive it. And then when you've got some free time, go back, watch the footage, and then go and implement it on the charts, guys. With that being said, my name's John, Forex Fire. We'll see you later.